Hello, this is Dr.Gail, and we're going to start in just a few minutes with our Financial Friday. I love that song. Hello, this is Doc Gail, and welcome to Financial Friday. Now, we started this a couple of weeks ago, and each week we're going to be covering a different subject on the 4 keys to wealth. Hi, Tisha. Thanks for joining. She's been here every week. Thank you. So, who am I? Doc Gail. I'm with BeConnectedLife.com. It's Be Connected, our company, as in B-E-E, connected. Our goal is to connect you, your family, and your business with education and enterprise solutions to help you be more successful. And so thanks to Cammie Red, she's having me on the 10 Dimensions of Wellness every week to share with you the 4 keys to wealth, so that you can become like the Bill Gates and the Rockefellers and make sure that everything that you've worked for, your assets, are protected and that they can create generational wealth. So I just want to recap and go over the 4 keys to wealth and what we've covered so far. So the 4 keys to wealth, the first one is putting your wealth in the correct tax position, putting your money in the correct tax position. Usually we work and we put our money in the bank where it's earning 0.01%, and then at the end of the year we do our 1040. So one of the things we say to you is that this setting up a system to protect your assets is governed by the IRS, and so you your homework was to download the 1040 and then the 1041. So if you have not done that, download the 1041 and the Schedule K1 from the IRS.gov website, because next week we will walk through that as we look through the next way to protect your assets. So you have to become familiar with the tax rules, and it's not that complicated. That's what they've led us to believe, but it's not. And so the purpose of Be Connected Life is to educate you in how you can set up a complex trust, just like the very wealthy are doing. Traditionally, this information is usually available to people with 10, 10, and 10. 10 million in income, 10 million in investment capital, and 10 million in assets. And so I've partnered, Be Connected, my company, has partnered with Legacy Management so that we can bring this to everyday people. Sly Stone. We are everyday people. So the first is putting your wealth in the correct tax position. Number 2 is protecting your wealth. That's the second key. The third key is getting your wealth to work for you. And the 4th key is passing on your wealth. So today we're going to talk about protecting your wealth. So how do we do that? Remember when I read this quote to you that when the banking system was first set up, it was designed to be two-party system, those who have and those who have not. And so it should not be a surprise to us that we've been working going, there has to be another way, because I seem like I'm just living from paycheck to paycheck. And when I do accumulate assets, how can I protect them? So protecting your wealth. download, if you have not, for next time, the 1040 and 1041, and I want you to look at the difference between those two forms. Because when you have a trust, you will be filing the 1041, which is a one-page form that's submitted to section exempt organization section of the IRS. Okay. Now let me also say, this is because a lot of people will watch the video or do a consultation with me, and then they say, okay, I need to talk to my CPA or my attorney. Please, if you're in the financial field, financial services field, if you're an attorney or CPA or financial planner, please reach out, because we're trying to educate you so that you can educate your clients. A lot of attorneys and CPAs have not heard about complex trust because they usually are licensed by the state that they're in, and they're accustomed to developing simple trusts, which are statutory in nature and governed by the rules of that particular state. Now we're saying, and when I would go to training the last 2 years, the majority of people in the room were CPAs and attorneys getting this information so that they could share it with their clients. So please, please, if you're in the financial field, reach out. We're here to educate, and we're looking to partner with you so we can get this information to your client. Okay, so we're going to put your wealth in the correct tax position, which is knowing the difference between the will, simple trust, and a complex trust. We talked about that the will and simple trust are what we call D&D. They distribute your assets when you are deceased, and that's all they serve to do. They then cost you money because they go through probate, which pays the attorney 22 to 25% to distribute your assets, and then those people are receiving your assets have to pay inheritance tax, etc. So by putting your money into a trust, now let me say this, every entity is taxable. Do not think this is I'm not going to pay any tax. The terminology, write this down, is I am interested and want to become educated on how to reduce my tax liability. We want to reduce our tax liability from 30, 35, 39% to 5 or 0% if possible. And that's what you do with a series of interrelated complex trusts. Okay? So, fourth key to wealth, protecting your wealth. Now, this is a mindset shift. And this whole concept of 4 keys to wealth, underlying at its foundation is a mindset shift. We've been taught to buy, and own stuff. But the wealthy, we have to learn how to separate control versus ownership. Control of assets versus ownership of assets. Okay, so remember, liability follows title. So when you own something and you have title to it, you are setting yourself up for liability, which means you could be sued and it taken away from you, or it taxed. Liability follows title. Liability follows ownership. So what do we want to do? We don't want to own anything. We want to do like Nelson Rockefeller said, which is own nothing but control everything. So with a complex trust, you're putting your assets into a complex trust. You therefore own nothing. If anyone was to sue you or come after you, you own nothing. But you control everything because you are the trustee to your complex trust. So if anybody says, do you have a trust? No, I don't. You don't. Because the complex trust has its own EIN number. It's its own entity, its own person. You control the assets and manage the assets of that trust. Here's the other secret. That trust, because you are the trustee of a complex trust, has to provide you with housing, transportation, communication, and education, and a variety of other things. And we write that into your trust document, which means it takes care of you. And those expenses are 100% tax deductible. They are not if you do a 1040 and your Schedule A and your Schedule C. You can take a portion and et cetera, and have all these receipts, etc. So that's another thing we talk to you about when you call us, when you go to the website rather and sign up to do your one-on-one consultation. We talk to you about your needs, your family needs. Do you have children? Do you have grandchildren? Are you single? What is your goal in terms of your assets. How do you want them distributed? We talk about that in the one-on-one consultation. We teach you also how to separate your personal wealth from your business wealth. Now, many of us have had businesses. I've been there. And I just wrote checks for my business expenses out of my personal account. If anything happens, if you are sued, that traces directly back to you. So we talk to you about and teach you and show you how to separate your personal wealth from your business wealth. Because people think that an LLC protects them. And the first word in LLC is limited, and the second is liability. It does not protect you from a lawsuit. So one of the things we teach you is to have your business only have enough money for its everyday operating expenses, and then use that Schedule use that Schedule K1 to move your money into your trust. Money in motion makes money because you're reducing your tax deficit. So those are the things that we talk to you about in terms of understanding. And a lot of people will say, yes, I have a business, I have an LLC, but they have a sole proprietorship, which means you have absolutely no protection if anyone tries to sue you. Because that sole proprietorship is tied to, guess what, your Social Security number. So if anybody tries to sue you, they do what? Their attorney's going to be looking for your Social Security number. With a complex trust, your Social Security number is not anywhere on it because the complex trust has its own EIN number and you're just a trustee. Okay? Now, the way you do this is when you have a LLC, a multi-member LLC, you are a member of your business and your trust is a member of your LLC. That enables you to move money from your business to your trust. And the IRS, and when you go to their website and it says, look up IRS trust scams, people will say, I have a business and they'll be paying for expenses out of their trust. Well, you cannot do that. It has to be a member. If you have an LLC, it has to be a member. Your trust has to be a member. Or if you have an S corporation or C corporation, your trust has to be an owner. So when people say to me, oh, I read the IRS, and I say, well, let's go through what they're saying, and then that's what we're telling you not to do. And so when you work with us and we help you set up a complex trust, we're around and for the first year providing you with a free consultation as to how to operate and manage the trust as a trustee. We're here for that. We don't just help you set it up and then disappear. We're here for the training, where there are quarterly trainings, that in-person training, there are phone conference calls that we do. We used to go to Cabo for advanced trustee training. Hi, Sonia, thank you for joining. And now all of that's going to be, of course, we're doing Zoom. So these are the things we teach you, is how to separate your business expenses from your personal expenses so that you can stay protected. And think about how the big guys and girls are never sued because they say they have nothing. Now they may have billions of dollars in assets, but it's in the trust to which they're a trustee. Okay? Now, there are two types of, when we say protect your wealth, you have your business wealth and you have your personal wealth. And we show you what can go into your business wealth, business trust rather, and what goes into your personal family trust. For instance, I started out with a family trust because I wanted to make sure that my kids and grandkids were protected and I had assets. And this includes like your life insurance policies. You'd make your trust the beneficiary. So it goes in there if something should happen to you and there's no tax consequences. If you have property, if you have equity in a property, something happens to you, that property is sold, the first person to be paid is your trust so that your recipients will not have to pay a capital gains tax on that money from property sold. Gold and silver, I've been buying little pieces of my $21 silver coins. That's going to be in the trust that will go to my grandkids. So your personal family trust, we show you what can go in there. And then the business trust, what expenses is covered by that trust. Okay? So those are the two keys. The second key, which is protecting your wealth. So I'm going to stop there if there are any questions from people on the call. But again, the 4 keys to wealth: putting your wealth in the correct tax position, protecting your wealth, getting your wealth to work for you, and having it for generations to come. I will be here next Friday as usual at 12 o'clock. Life.com. That's BEE as in Bumblebee. BEE connected, CONNECTED life, beconnectedlife.com. Because my business is, so the website is life, or you can email